Hello friends, this is Leslie here from Leslie's Voice, and today I'm going to talk about a very important topic for both job seekers and also people who are employed right now, right? So you might be thinking, what is that very important topic, right? So I'm going to tell you this topic is all about your salary, the money that you're going to get as you are being employed, right? So we are going to talk about CTC. Okay, it's a very important term. All job seekers love to have maximum CTC, right? We negotiate, we ask for 30 percentage, 40 percentage hike, etc. But one thing job seekers fail to check before accepting an offer, they fail to check how much take home I'll get. They might ask their employers, but however, they don't know how to calculate how much take home salary we will get, right? So this video is going to help you to understand what are the various components in CTC and how you can save taxes with CTC, right? And how much, very importantly, what will be your take home salary. You will calculate that. You will not ask your employer, you will not ask your future employer or your friends, but you will be able to calculate by end of this video. Okay, so I hope you like this topic, right? Great. So what is a CTC? CTC, it's my salary. That's what you might say now, but that's not the story. CTC is your salary, that's fine. But what is a CTC? Why it is called as CTC? CTC is cost to company. That means by employing you, right? By employing you on their payroll, how much cost this company will incur is called CTC. So if they want to hire you as an employee in their organization, then what are the expenses, right? All these expenses put together, it says CTC, right? That's called CTC. So your expenses can be, your salary and your bonuses, your incentives, everything included in your CTC. So as a job seeker, it is your salary, yes, that's right. But as an employer, it is an expense, and how much expense is called the total CTC. Okay. So let's come into the topic now. Now, what are the components of CTC? Right. CTC, there are a lot of components in the CTC. So only if you understand what comes under what, then you will be able to derive what will be your take-home salary, what is this amount, how much it should be, etc., etc. Okay, cool. So there are three major components in any CTC for that matter. Okay, there can be three or two, but minimum two will be there, maximum three will be there. Okay, so the first component is your fixed salary. That is, whatever the condition be, if you are employed, you should get that much amount in your hand or in your account, right? That is called fixed salary. Okay. The second component is variable pay. That means based on your performance and the company performance, not just your performance. Based on your performance and the company performance, company decides, okay, we'll give some bonus to you or we'll give some incentives to you. That is called variable pay. Okay. And the third component is your retirement amount. That means you work for a company for till your age like 60 or 57 and you get retired, right? Then at that time you should have some pension amount or something for your after retirement, right? So for that, government has designed a policy saying that this much should go for retirement, right? So that is your retirement. So all this put together is called your CTC. Okay. So let's come to the first topic now, that is your fixed pay. Okay. So your fixed pay has two things. One is your basic and HRA. And the other component in fixed pay is your allowances and reimbursements. Okay, there are two things. One is your basic in HRA and your allowances and reimbursements. So basic is nothing but a minimum salary that should be offered to you. So people say my basic should be more. There is a difference between basic salary and base salary. Please remember, don't get confused while you see the CTC description. Don't get confused between a base salary and a basic salary. Basic salary is different, base salary is different. Okay. So base salary is a combination of all your fixed, is called base salary, but basic pay is just your basic pay. That is the topmost component in your CTC. Okay. So how is this base salary arrived? That's a very interesting question. So when a company decides to pay or hire you, they decide your salary, right? So they have certain calculations. So they say it as a gross pay. How much will be gross pay? Gross pay is something apart from your retiral amount. That is your gross pay. Okay. So retirals is not calculated in gross pay. So let's say like CTC is there, fine, and gross pay is there, then net pay is there. Okay. So from CTC, if you minus retirals, then it is gross pay, and from gross pay, if you minus your taxes, then it is net pay. Okay, understood that? Cool. Now let's come to the basic pay. How is basic pay calculated? It can be 40 to 60% of your gross pay. Your basic pay should be 40 to 60%. It can be 40%, it can be 50%, it can be 60% also. So company decides like how much percentage it should be, but it should be between 40 to 60 on your gross pay. Okay, so first company decides the gross pay, how much we have to pay. On that they put 40% to 50%. That comes to your basic, and then they calculate the HRA, that is house rent allowance, right? So HRA is calculated on your basic, that is again 40 to 60%. Most companies put 60%. 60% on basic, on your basic pay. That comes to HRA. Okay. So your basic and HRA is completed. And they have decided on gross amount, right? Anything after this basic and HRA, that means gross pay minus basic and HRA, that comes into your reimbursement and allowances. This is the very important thing that you need to note, that this components which is going to be there is going to help you in saving your taxes. If you don't have these components, then sorry, you cannot save your taxes. Okay. Some companies put this as a flexible benefit plan or flexible allowance plan, or some companies just they list out their benefits in the CTC and they put it. Okay. So what is flexible allowance plan? You might ask this question. Flexible allowance plan means they would put all the benefits possible in that, and you can choose from it what are the benefits that you want. If you don't choose, then it directly a taxable amount. If you choose, then it's a non-taxable amount depending on what benefit you choose. Okay, that is flexible allowance plan, but not all companies has this plan. Only few companies have. If they don't have, then they'll put it in the CTC itself. In the annexure, they'll put it what are the components like basic, HRA, and then your medical, and then your leave travel allowances, etc., etc. Okay, that comes like that. We'll see in that in detail. So fixed pay, basic pay, and reimbursements, right? Then let's come to the variable pay. It's not mandatory that all CTC should have variable pay. Some organization has variable pay in their CTC structure. Some do not have. Okay, but sales positions, most of the sales positions has variable pay because their job is more on target basis, right? They have to achieve this much targets. So that is what salespeople do. So any job that relate to targets will have this kind of incentives and variable pay, but not necessarily only they should have. Companies has fixed for other people also. Even IT companies, software engineers has this structure. Okay. Now let's come into the variable pay. Variable pay, there are two things. One is bonus and one is incentive, that is performance linked incentive. So they say if you achieve this much target, then you get this much of this much percentage of your basic pay as your incentive. If you achieve this much target, then you get this much percentage of your bonus. Okay, so that is what variable pay is. So it's purely based on your performance and the company performance. That's very important, because people think I performed well but the company is not doing well, then you will not get. Company did really well but you didn't perform well, then you don't get. So it's all depending on your appraisal, you will get this. Okay, so that is variable pay. The third component, as I told, it is retirals. So that's very important again. So retirals, there are two components in retirals. One is gratuity and one is PF, your provident fund. People say 12% I have to pay for PF, 12% company has to pay. Then why it is included in CTC? People ask me. While I recruit people ask me this question. So as I told, cost to company, all the expenses because of employing you is called cost to company. So even the 12% paid by the organization, 12% paid by you, it comes in your CTC. It is not outside your CTC. Okay. So 24% goes to your PF. 24% of your basic pay goes to PF. And 4.81% goes to your gratuity. Okay, so these are the two retirement amount which you will not get immediately. Gratuity you will get only if you serve 4 to 5 years of 4 to 5 years in the same company. If you don't serve, then you will not get. Only if you serve 4 years or 5 years, then you get gratuity. And provident fund, yes, you will get at any time, right? So this gets accounted in your provident PF account, and once you leave the job or once you get retired, you can claim that amount and you get a lump sum amount on that. Okay, so this is your fixed pay, variable pay, and retirals. Now let's see about the allowances and reimbursements. I told there are few allowances. I'll list out few. First one is medical reimbursement. That means if you go to hospital and doctors say you have to buy these medicines and it comes to around 2000 rupees, and after 2-3 months again you need to go to hospital, doctor says you have to buy another few medicines and it comes to another 3000. So like this you will be getting few bills in a year, right? So maximum you can claim 15,000 rupees per year, that is 1,250 rupees per month. So that is your medical reimbursement. That means you can select this option, you can select 15,000 per year, you will pay bills and get the amount back. So your 15,000 will not be taxable. Okay, to get that you need to give bills. If you don't give bills, you will not get that. I mean, you will get the amount, but it will be taxable amount. It will be taxed and then you will get it. For example, if you declare this 15,000, if it is a flexible allowance plan, then you can declare. If it is not a flexible allowance plan, then you cannot declare. It's a fixed thing in your CTC, so you cannot change it. Okay, so that 15,000 you will get only if you give bills for that. Otherwise, you will get after deducting taxes. Okay, and let's come to the next thing. There is transport allowance. So your bus expenses and your fuel expenses, this transport allowance can be claimed. Okay, meal coupons, now we call it as Sudaso coupons, right? So if you declare, if you are having a flexible allowance plan and if you declare some amount for Sudaso coupons, then you will get as a coupon, not as money, right? You will not get in your account, but instead you will get a coupon with which you can pay in your restaurant, pay some bills in supermarkets, all those things you can do. So how much is that amount? 2,200 rupees per month. Okay, And then mobile and internet reimbursement. So some companies give this option. They can reimburse their mobile bills and internet bills that can go up to 2000 rupees. You can get reimbursed. So this is again, if you give the bill, it's non-taxable. Okay, that is 2000 rupees per month. And leave travel allowances. Leave travel allowances is something like you are making a travel. It can be business travel, it can be personal travel, but it should be on a business day. Okay, so if you're going on travel, then that tickets you can get reimbursed. So the maximum amount you can get reimbursed is 12,000 rupees. Okay, and then there is another component called company car or car maintenance allowances. That is your vehicle maintenance allowances basically. That can be like 1,800 rupees per month. Okay, so again you should show bills and get the amount reimbursed. And uniform allowances, that is for people who work in manufacturing firms, so they get uniform allowances as well. And children education or hostel allowances, if you have a child who is or studying in a school, then you can get 2000 rupees reimbursed for your tuition fees. Okay, newspaper and journal allowances, you are buying newspaper, you want to get that amount reimbursed, yes, you can get it, 1000 rupees. Okay, so these are the few components available in allowances and reimbursement. One thing you need to understand, what happens if I don't declare? Nothing happens. Only your amount will be given to you after deducting tax according to tax slabs that are in the government. Okay, if you declare all these things, if you pay or show all these bills at the end of the year, then I'll give another scenario here. So there are two things. One is the years of the company starts in March, April, right? Most companies, otherwise January, December, January. So whatever it may be. So that time your company payroll team will say, guys, please declare your taxes, declare your this, etc. Please go to portal and do all these changes. So at that time, if you don't do, then every month that will be taxable amount and deducted and then given to you. Okay, but if you obey correctly and then you declare all those things at the start of the year, then those amounts for whichever you have declared will not be get deducted, because they assume you're going to show the bills and get the tax reimbursed, so that those for those amount tax will not be deducted and you will get that money. But if you fail to show those bills at the end of the year, again the payroll team will ask you to show the bills. If you fail to show that, then a lump sum amount will be deducted from your February month, March month salary in order to take all taxes, because they have assumed that you will show the bills, but you are not shown the bill, so they have to deduct the tax, so they will do it in the year end. Okay, that's how it happens. Hope you understood now. So this is all about CTC. I hope this video helped you to learn about CTC. So now let's come to the point of how to calculate your take-home salary. So I told you CTC is there. From CTC you deduct your retirals, you get gross pay. From gross pay you deduct your taxes, you get your net pay. So how do I calculate taxes? So taxes, it depends on your salary. Okay, so let's say if you are making 6 lakhs salary, then till 3 lakhs government says that you don't need to pay taxes. Okay, if you're a woman. If you're a man, then till 2.5 lakhs you don't need to pay taxes. Okay, so remaining that amount, 6 lakhs minus 3 lakhs is equal to 3 lakhs again. So that 3 lakhs you have to pay taxes. For that 3 lakhs, you can show your HRA, you can show all these reimbursement which I told you. So all those amounts added, and from 3 lakhs you have to minus remaining amount, how much it is, let's say 1 lakh. For that 1 lakh you have to pay taxes. So how much I have to pay? That again on the tax slab. So if it is 6 lakhs, then I think it's like 10%. Okay, 10% on that remaining amount is what you need to calculate. So if you put 10% on 1 lakh, how much amount it comes, that is your taxable amount for the year. So that's how much they will deduct. So you can calculate that for a month and minus it from the gross pay, you will get your net pay. Alright, thank you very much for watching this video. If you like this video, please share it across. And if you have any questions, please do comment. And if you like to ask some other topic for me to speak, then obviously you can comment that as well. And please give a thumbs up.